A candlestick shows an asset's price movement over a set period. Traders use candlestick charts to determine possible price movement based on past patterns. So, how to read the candlesticks? A daily candlestick has components showing the 4 price points. They are the market's open, the high, the low, and the closing price. When the market close price is higher than the open price, we call it the bullish candlestick. In contrast, when the market open price is higher than the close price, it is called the bearish candlestick. There are many candlestick patterns. Bullish patterns indicate that the price is likely to rise, while bearish patterns suggest that the price could fall.
Remember, candlestick charts represent tendencies in price movements. No guarantee it works all the time.